Good morning, good afternoon, good evening, great weekend. Hello, traders. Welcome to another segment of Momentum Movers with Darnell Price. Um, Getting right into it, I think we should maybe not start with the NQ. That's my bread and butter for trading. Let's take a look at the Wix, the VIX. Sorry, let's take a look at the VIX, and we'll look at it on the weekly and just see, if we could gain some clarity on what underlying and market internals suggest for price action, what happened last week. We'll cover what happened last week. We'll go over some news events that are upcoming for this week and that have happened over the weekend. And then we'll go right into what I feel I should expect for next week, what we'll expect for next week, right? Um, and hold me accountable with those ums. I noticed in my last video they were quite frequent. I'm working on that. I'm working on other things as well. I would like to just there it goes again, right? I'll meticulously try to point those out until they stop happening. Getting right into it. So looking at the VIX where we have a higher high, um, there it is again, a higher high. And then after this high here, we have a higher low. And we could go ahead and denote those with the presentation utensil. So we have a higher, we have a high, we have a higher high, we have a low, we have a lower low. And this goes ahead and, you know, it adds to the uptrend in the VIX. And basically, what that suggests is that you should expect more volatility in the market, whether up or down. The range of moves, the ATR, the average trading range of each daily candle, should be higher, right? That's what that would suggest. Going down into the daily, there it is again. There it is again. We have a 3 day sell off on the VIX, but overall, as we saw on the weekly, we did make a higher high and a higher low, so that is continuing a weekly uptrend in the VIX. And we should, at these levels, expect higher range days. Looking at the dollar, starting on the weekly time frame, we also have, let's count the weeks that we've went up. 12 weeks with, this one is a red candle, but as far as consecutive weeks making higher highs, right? Higher highs and higher lows, forming, the definition of a uptrend. Even though we had our first red candle in 12, we have still maintained a very strong, very pronounced uptrend in a dollar. And that is very significant when you consider the fact that a high dollar is a massive headwind for the markets, right? It makes things, the Fed is fighting inflation. They're raising rates, and the value, because rates go higher, the value of the dollar, it also goes higher. As the value of the dollar goes higher, just think, if even if you don't understand economics in general, just think what it means for the value of the asset that we make purchases, or our medium of exchange. When the value of the medium of exchange goes up, it brings the price of those items down, right? Like, if, let's say, instead of dollars they were glass beads, and one glass bead on a month ago would get you a hamburger, or 10 hamburgers. One glass bead gets you 10 hamburgers. All of a sudden, people start liking those glass beads, and the value of them goes up. Well, now, you're able to buy less with that glass bead because it's more valuable, right? well, you could buy more. We'll not get into that, but basically just know when the value of the dollar goes up, assets are repurchased and their value relative to the asset of purchase, the medium of exchange, goes down. I think that's the best way to say it. And we'll have talks like that later. I'll have sessions where I could ramble, and that'd be more appropriate. Here, where, like I say, we're just getting into what happened last week. So on the semiconductors, where are we with semis? Um, let's get rid of that. I thought I did. All right, that's gone. So we have somewhat of a rounded top here. Uh, there it is again. We have a there it is again. A high, higher high, low, higher low. Right. So we could be starting a uptrend. We will want to see this week and see if we could get up to what would be a resistance if you were to draw, like, say, a trend line right here, there should be some resistance in this area. If we get up and over that, we could switch down to a daily time frame and just try and see if we could find where. And let's see, I think we should have our patterns from last time. These are old. These aren't the ones that I made. I made a drawing set just for this channel. We'll delete all of that and we'll hide indicators and we'll draw fresh trend lines. And I won't spend too much time on this. This isn't very important, but when you consider companies like Apple and Nvidia and their relationship to the semiconductor index, as Apple being a mass consumer of those for the manufacturing of their products, right? You just want to know what the raw ingredients, what they're being, the index that tracks those, the ETF, pretty much what it's looking like. And so if you consider this being a shoulder with a neckline that's broke down, we've retested it and broke above it, this would, be somewhat bullish for the semiconductor index, right? Um, so, if we don't immediately next week get a pullback from this area, right, going down, then companies like Nvidia, that make up this index, and I don't know if I could find the weighting here, maybe in a later video, I'll gather those resources and we could see what companies and their respective weightings are in the index. But you have your AMDs, you have your Nvidias, you have your Qualcomms, you have your what else? There's a lot of semiconductor stocks that make up the Van Eck at different weightings, and this is what this is tracking. And knowing that this is in an overall bull trend at the highs, have just made new highs, could potentially be making. So we can't really. This would be the reason for the bullishness in an asset like the Nasdaq and the Nasdaq index. We won't cover the ES. I love the Nasdaq. That's what I trade on a daily. I think this is where we'll pretty much stay. Before we get there, though, like I say, we haven't talked about what happened in the NASDAQ. Let's go ahead and cover it as well. And then we'll get into what I expect to happen closer to the ending of the video. If you've made it through this much of the video, I really do appreciate it. This is a new thing I'm trying. Um, I would like to get a little bit better. You've made it this far. Stick with me. And like I say, as we'll get into what we should expect for the week ahead. So as far as last week, we got non-farm payroll on what was that, Thursday, Friday. We had a big sell-off when we got the numbers. We could go into like a 4-hour chart and we'll be able to see that. Let's go to a 15-minute because it was pretty pronounced, right? It was so we were flat. I mean, this range we traded in from Thursday evening, right? When the session when after settlement when we opened up 5 Central, 6 Eastern, it was nothing to do there. However, midnight going into Asian session, or what is that, London? One of these sessions that start at 12 a.m. I want to say that's London. We start at the beginning of London. We opened up. We had a nice move. Close to the end or beginning of New York, kill zone is when we really started to sell off. Right until when the numbers printed. Right, those numbers printed, and we could drop down to a 1 minute, and you could just see how violent of a sell off we had on those numbers printing. What time was that? Did I skip some days? Yeah, there we go, right there. So yeah, those numbers came in and we immediately sold off for, a good 1.5% pretty much. And we wiped out a lot of shorts down there, right? I have a lot of levels in that area that I was trading from days prior. We came down here and we broke through, what would this be? Thursday's low, right? I was trying to grab a long down there. You can see I have my purple line. It comes back from this wicked looking inverse head and shoulders back there. Um, but I was not able to get my feel. I was so dissatisfied this day. I missed my field by ticks, right? Like I had it like right there, and I missed a lot of upside on futures. It's pretty disappointed, but hurt about that. But it's the nature of trading. You want to make sure you get a ultimate, the ultimate entry, being that it'll trade back and forth. The quicker you could, or the better entry you get. Anywho, we'll get into trade talks later as far as price action and where we're going, where we've been rather. So yeah, we sold off early Friday pre-market before New York actual session began at 8:30, which would be right up in here, and we rallied all day strong. I mean, no real pullbacks until what, about 11 o'clock lunchtime for London, right? And we rallied also into the close, and it was we drew liquidity to the downside, and we delivered it upside and ran stops for from the upside as well. And I'll get into what I expect after we cover what news we have. That way we can put what I expect in the context. Okay? This is what I expect. We'll come right back to that. Sorry about my Spider-Man background, but what I want to get to is this. All right. So coming up in the news next week, we have I think Monday is a holiday. We have Columbus Day, right? Federal holiday. Markets will still be open, but there are no news events for Monday. The real news kicks off not Tuesday, right? Tuesday, we have a FOMC member, Waller. He'll be speaking. He could say something that moves the markets, but it's not really what the meat and potatoes of the news would be. The meat and potatoes comes on Wednesday, Thursday, and then we have ending the week Friday. Wednesday, Thursday, we have PPI producer. What is that? Producer purchasing index. Let me see. I thought there was a way to find out exactly what it is. Producer pricing index. Yeah, prices of goods. That's what I mean. But we have that on Wednesday. We get FOMC. Waller, he'll be speaking. We get our Fed minutes from the rate decision. Going into Thursday, we have CPI. So that's consumer pricing index, month over month, year over year. That'll be very important as This is what the Fed looks for when we talk about inflation. When he talks about his dual mandate to keep the reins of high inflation down, and also we have unemployment claims, and maintain price stability and try to maintain the employment rate at a level that could spur economic activity. Right, that's his dual mandate. Then on Friday, I'm not sure how important the preliminary UOM consumer sentiment. This is pretty much how market participants, not really market participants, but consumers in general feel about inflation. So forward-looking guidance, their inflation expectations. That's the best way to put it, right? And that's one of the tools in the Fed's toolkit, right? Like if consumers expect inflation to keep increasing, they will spend less and save more, right? It's one of those things. If they expect inflation to come down, they're spending more. The Fed wants to know how we in general feel about the higher prices at the supermarket. So we have some pretty impactful news events coming up, right? We've also received some news events as of late that should have an impact on inflation. I'm gonna try to stay objective on this topic, right? But I as of yesterday morning, not Iran, Israel and Hamas, they've entered into a declaration of war, right? There have been some events over in the Middle East, as you know, that's where the bulk of oil comes from. That's where OPEC is headed, over there in the Middle East, and so I would expect that uh, energy in general, the price of energy. And we could take a look. I think we could. This is a good time to go back to the charts. We could take a look at crude, right? So crude oil this year has been on a massive tear, right? If you look year to date, I'll shrink this so that we could expand it out and bring it over. If you look year to date, we started. Where's my? Yeah, unlock that. But since June, where we were around 65, we had lows in May. Since those lows in May, we have been on a tear for a good 51%. That's decent upside. Over the last week, we have sold off, making our first real lower low, lower high since the run up. Well, we've had a few, but this is the most pronounced, right? We've also come back in and tested this area right here for support. So, just straight technical analysis speaking, we do have an area right here where you wouldn't want to break it, because that would start, that would give us room for a downtrend. But if you did want to retest a level and bounce from it, this would be that level. So, from a technical perspective, this would be a decent place to bounce. Now, we could come down here to the 74 level. I like this honestly. I would be looking for us to hold here. If any lows below what 80, if we could keep all above 80, that would help maintain the bear thesis that I have in the markets. I hate to say that, but and as far as being a trader and having a decent outlook on the markets, you have to frame a thesis. My thesis is that the markets are going down, and for that thesis to remain intact, I would expect energy also to remain elevated. This is just a bullish retest. If my thesis is correct, then we should expect higher. We also have, uh, I don't know how to put it, but we have fundamental, all right, evidence that would support this, being that what's going on in the Middle East, what's going on with Ukraine and and Russia, right? And the demand for energy with Europe, if you keep, abreast with macroeconomic events, energy is in demand. That's what it comes down to. Even if you keep an eye on our own SPR, our Strategic Petroleum Reserve, and how our own head of state is saying that he's not afraid to draw it all the way down, and if prices remained up there, I hope he's filling up while we have this pullback, right? You buy on the dips and use it when it's high. Like, I hope the head of state is taking advantage of some of this downside and all. But in any case, we have tension in the Middle East. This candle is closed in a few hours. What, about 12 hours? Less than 12 really. Markets will be trading again. I would expect some upside in oil, as we have a lot of uncertainty. Considering, it's been some gory headlines, right? I grant it, from a humanitarian perspective, but from a market perspective, I don't think the real headlines have hit yet. We have had a declaration of war. However, what we have not had is any the fallout from the theater of war. We haven't had supply chain disruptions become announced. We haven't had refineries become a target, right? Things of that nature. When what they have talked about is that Israel is doing pretty well. And his next point, it leads into how I feel about the dollar. It circles all the way back around, right? America is already fighting on two fronts. Whether we have troops on the ground or whether we're just supporting it financially. About Russia and Ukraine and the aid that we provide Zelensky. In how many years has this been going on? It feels like forever, but we're constantly shelling out resources. At the end of the day, that's what it is. We're shelling out resources, aggregate demand. It's going out the window to Ukraine to help, and for a good reason. I'm being not cynical but objective about the situation. I could understand why Ukraine remaining an independent country is important for U.S. You don't with us with the UN, what is it, NATO, right there on the other side of Ukraine, right? You don't want Russia and NATO sharing a border, right? I can understand why that would be, and also there's a lot of reasons. We won't get into geopolitics right now. We could spend a whole nother video on that alone. Regardless, you have Ukraine and Russia. You also have China and Taiwan, right? China has not made drastic efforts to take Taiwan, being that they hold Taiwan Semiconductor, which ties back around to why it's important to watch the SMH, right? So this is what I feel is happening, right? Like it goes back to the art of war. U.S. is getting stretched thin. You have Ukraine and Russia. You have China and Taiwan, and now you have Israel and Hezbollah, right? And you have the U.S. who wants to be a friend to someone in each one of these conflicts, right? And so we've promised aid to Ukraine, right? We're giving them arms and weapons and money. We support Taiwan. They have all of the semiconductors that make everything in the U.S. work, right? And also we have Iran. There's our oil, right? And so the U.S., I'll erase all this, but the U.S. is constantly pumping out dollars, right? The dollars are in demand, right? The value of the dollar will continue to rise, right? And also as soon, but our our enemies are the enemies of our allies. U.S. is making no real effort to call anyone its enemies, but the enemies of our allies, right? They understand that the U.S. cannot fight a war on all of these fronts, right? We can't. We're stretched thin fiscally, money wise. We're stretched thin as far as the military aid that we're providing, right? Sending missiles and what are those things called? Those attackums to, that's a nice name for them. The attackums to Ukraine and all that. We got offshore carriers and things off Taiwan, and Israel is doing good with its Iron Dome, but if Hamas has 50 million rockets and Israel doesn't have 50 million and one rockets to defend with that Iron Dome, they're going to be looking for America to send missiles to keep that Iron Dome running, right? And they're going to need aid and everything else, right? And so the second that you see the U.S. ramp up with aid to the Israeli efforts, you could expect Putin first to go ahead and escalate the Ukraine scenario, right? Because that will have the U.S. fighting on two fronts. At that point, you have Xi Jinping in China. Well, that's his go ahead when we're fighting on two fronts to go ahead and escalate in Taiwan, right? They do not. They made it vehemently clear that they will retaliate for what Pelosi going over there last year, earlier this year, whenever it was, talking to Taiwan, that there will, all of this. They've made a whole bunch of threats, but if ever there was a time to make good on those threats, it would be when the U.S. has its hands stretched. So I would watch the macro political, and then we're doing all this with a divided Congress, right? Like facing government shutdowns between the different sides in the Senate and the House. What is it? The House, right? The House Speaker being threatened to be, so there's a lot going on. This is the time to keep your head in the news, because all of these news events will drive price action. As uncertainty goes up, market prices will be repriced lower, right? And a lot of the events have, they're right at the doorsteps of what has held this market up, which is the Nasdaq and tech. So I would keep an eye on the news. And with that said, let's go into what I expect to happen going forward this coming week, right? So we'll switch down to a 6-hour chart, or how about a 1 hour? I think I drew this on the 1 hour. So we had this massive rally, and in a context where, keeping things in context, since April, right? We've been in we've been bound by a upward parabola, and it's a parabolic uptrend would be if it was shaped like this, right? And I guess at some point it was, but that broke. I would consider this a parabolic downtrend where we built and killed a lot of that momentum, and now the momentum is parabolically being decreased, right? And we hit that resistance of that parabola on Friday, right? And it's a parabola, and it is a resistance, and like all resistance lines, even when they're horizontal, right, you can consider this white line a horizontal support, or this resistance. We do break them sometime, but it's just general area that you want to be mindful of, right? So it's a parabolic resistance. We have broken it marginally in the past, and as it's been going down, it's been holding a lot stronger, though. If you look at it, the extensions past it on the downside, have not been as pronounced when we were going up. That said, let's zoom in to where we are now. Get rid of this. So we closed right on it. I mean, pretty. It's this upper parabola right there. I think on a 1 minute chart, it's right on it, right? It was decent resistance. That's where we closed. So I expect us to go down from here. Now, before this Iran thing, I was expecting us to maybe gap up and go down. I'm not sure how Sunday's session is gonna open. I'll be watching it when it opens 5, 6 o'clock within the next eight hours or so. Believe me, I'll be there. I want to see if we open gap up. I would like to open gap up and just bleed off down. I would like not to have a downside gap that would need to be filled later. So that's where I am with that. But let's keep it on. So we understand the context of the parabola and how I feel about that, and then we have this medium time frame. It's not really set in stone. It's really drawn from in here. But if we consider, what's important is what happens after Friday's close, right? Um, there's only two paths. We've talked about the news events and that are coming up, the market news events that we spoke of. They're down here. We talked about the FOMC, the CPI, PPI, and how they're drivers of market price action. And then we have this Israeli conflict that's brewing in the Middle East. Uh, to me, that spells a big no for chop in the center, right? I do not consider that we will be range bound with the type of news we had, considering the elevation in the VIX and the volatility in the dollar and the potential for it to start making highs again. We talked about that as well, right? That said, um, I'm bearish. We're at the resistance. I'm looking for, and maybe I use a different color with these markers? Let me see. Um, I don't see where that I could do that now. I'll have to look into that. I just found a drawing tool so that I'd be able to draw on the screen. But yeah. Anyway, we'll keep it red for now. I expect the average of price action to be found in this going. So this white line is the end of the week, right? I think that's Friday's close down here, and this blue line is the end of the month. That's November's open, right? So going into and I think this first triangle is Monday. Monday will be the canary that lets me know how I expect the rest of the week to trade, right? If Monday is bullish and we close in or outside of this box, above this black line, that's pretty much it inside of this upward parabola. I'll, you know, I'll take some long scalps, right? But I'll look to stay bounded from the downside by this red parabola. That's not my favorite case. I would have to give that, a back pocket scenario, right? Back pocket. What I'm looking for is, for us to gap up maybe and, just spend majority. Like if, I don't think we'll come out of this side that much. We may come down here and test back in it, but I expect, and that's going past this week, but basically just going forward, I expect us to stay for the bounded by on average this area. So it'll be chopped. We won't just have a thin price action in there, but I'll be taking shorts anytime we come inside of this area, and I'll let them go close as I can to this blue line. Right. So that's my game plan going into next week's trading. Any shorts I could find on this red parabola, I'll be taking those. If I could go in two times the normal position, At the parabola, take off half here, leaving on a normal position, locking in profits down here, waiting on a retrace back higher, and yes, just staying bounded by what price is that? 14 in the 36s, the 436s. That would be what I'm looking for going into next week. Let's see if there's anything else to cover. I'm not sure how long this video is as of now. I'm slightly more pleased with it than I am last weekend's video. Um, I am saying a bit more. We could go. I tell you what, we could go through, just go through the list and see what we have here. The NQ, the ES and the Russell. We'll cover at a later date. I think I pretty much got out what I wanted to say for today. And I think we should just, if you have nothing else left to say, we should just end the video here. If you made it to the end, I really do appreciate you spending this time with me. I do hope to continue to increase my production quality. I will get into editing. I will get my presentation a lot better. But this is at the bottom, and we're building momentum. So again, thanks for being here with me at Momentum Movers, and this is Darnell Price.